Welcome and thanks for joining us at EMII.com. I'm Remy Huki for your Capital Markets Report. Today is Monday, July 7, 2008. The Canadian telecommunications company BCE Inc. has agreed on terms of a $35 billion sale to a takeover group led by the Ontario Teachers' Pension Plan. This according to the Associated Press. The announcement ends suspense over whether the bank's funding the takeover would try to back out of the deal or that the price would have to be lowered. The acquisition price remains at $42.08 per share in cash. Citigroup, Deutsche Bank, Royal Bank of Scotland, and Toronto Dominion Bank are slated to provide billions in financing to complete the deal. Including assumed debt, the transaction is worth $51 billion. And staying with capital markets news, Vimpelcom, Russia's second-largest mobile phone operator, has paid $561.8 million to boost its stake in Kazakhstan's carrier Kar-Tel to 75%. This according to Reuters. Vimpelcom has bought a further 25% minus 1 share in Kar-Tel in addition to the 50% plus 1 share it already owned. Vimpelcom bought 100% of Kar-Tel, the second-largest cellular operator in Kazakhstan, in September of 2004 for $350 million, plus the assumption of nearly $75 million in debt. It later sold 50% minus 1 share in the operator to Crowell Investments Limited, a Cypriot company beneficially owned by shareholders of Kazakhstan's ATF Bank. And in more capital markets news, mortgage lender Bradford & Bingley says it is revising its plans to raise new capital after U.S. private equity fund Texas Pacific Group reneged on its deal to invest. This according to the Associated Press. TPG withdrew after Moody's rating service downgraded Bradford & Bingley's long-term debt ratings from A3 to Baa1. TPG's agreement to invest $356 million in B&B included an escape clause in the event of downgrading. Bradford & Bingley, a specialist in mortgages for the purchase of rental properties, now hopes to raise $800 million entirely through a cash call to shareholders. And in other capital markets news, Japan's Mizuho Financial Group plans to raise $2.8 billion by issuing preferred shares as the subprime hit bank looks to shore up its capital base. This according to Reuters. Mizuho, Japan's second-largest bank, says it will issue $2.8 billion of the shares, which do not convert to common stock to domestic institutional investors. Although most Japanese banks avoided subprime investments, Mizuho took an aggressive tack. Bad bets on the U.S. subprime mortgage market cost the bank 645 billion yen in the year to March 2008, making it Japan's biggest casualty in the credit crisis. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto your Capital Markets channel online and read the full stories and latest developments.